Hello guys, good afternoon, good morning, good evening from wherever you are. My name is the Genius Trader and today I'll be making a recap of a trade that I took in the New York time. And as you know, I always start my analysis in the 4-hour time frame. So what am I looking in the 4-hour time frame? I'm looking for the overall market direction or the trend. And if you come to the end, of course, you know I trade the S&P 500, which is an index for the US 500. Guys, I only trade indices and gold because I find that they are more predictable or they align better with my strategy compared to other instruments like currencies. So let's jump to the 4-hour time frame in the chart, and I will draw a trend line in the 4-hour time frame, and you can see the market is in an overall downtrend. And so I'll mark the trend line. And if you come to the 15 minutes time frame, you can see the market has been making lower lows this week, which means that the market has been in overall downtrend. So before 9:30, let me mark 9:30 with a vertical line. 9:30, which means New York open. You should only trade indices after 9:30 because the market for indices opens after 9:30. So this is the New York open. I've marked it with the vertical line. And before 9:30, the market was trading in a tight range. You can see this range which before 9:30 during London. This is the range. And what I expected is for the price to move to trade below a point of liquidity or a liquidity zone, reverse, create a fair value gap, and trade to another point of liquidity. So my first task or my first step was to identify the areas of liquidity. And in the 15 minutes time frame, if you look on the left, we have these relatively equal highs. I'll mark this zone. Let me change the color of this to black to avoid confusion. Then on the downside, let me mark this using another color. I'll use blue. So this is New York open. This vertical line is New York open. The black vertical lines indicate the previous day. So this is Thursday. So this is Wednesday, Thursday, and today Friday. So this is London. This is New York. This is New York open. So below, we have these relatively equal lows that were created during London, during Asia and London. So I'll also mark them. So here we have these relatively equal lows and these relatively equal highs. So these are my liquidity zones. Then I'll jump into the 5 minutes time frame. In the 5 minutes time frame, you can see the price started to trade or to draw near the relatively equal lows or the liquidity zone. And what I expected is for the price to wick or to trade below the liquidity zone, this liquidity zone, violate these relatively equal lows, trade back high or reverse direction with a change in character, create a fair value gap, and start trading high. So as you can see, after 9:30, after the bell, after the New York Open, after the bell, the price did just as I expected. It traded below these relatively equal lows, as you can see, and immediately reversed the trend. So the next step, or what you do, is you begin looking for the fair value gap. And according to the inner circle trader or the ICT, you start looking for the fair value gap from the 5 minutes time frame. And if I look in the 5 minutes time frame, we really do not have the fair value gap. So you shift or you come to the 3 minutes time frame to look for the fair value gap. In the 3 minutes time frame, we do not have the fair value gap. And when you come to the 2 minutes time frame, we also do not have the fair value gap. And when you come to the 1 minute time frame, when I came to the 1 minute time frame, I finally found the fair value gap. You can see this is the 1 minute time frame. Let me expand this. And if you look closely, we have a break of structure here. Sorry guys, which I've marked with this line, with this line. The price broke above this zone and crossed above it in the 1 minute time frame, and also created a fair value gap. A fair value gap is a gap created between 3 candles. We have this fair value gap. You can see this between this, the first candle and the second one, there is this large green candle, and it has got a space for a fair value gap between them. We also have another fair value gap created here. You can see this is another fair value gap created here between these 3 candles. And on the left, we also have an inverted fair value gap. This was a fair value gap that was created when the market was moving downwards, or when it was in the down trade. Stay with me, guys. So you can see this is the fair value gap, inverted fair value gap. Between this candle, the red one and the red one, there is this fair value gap. So if you have been following my channel, or if you trade the ICT model, you know that you should only trade or enter a trade when the market has violated a liquidity zone, shifted direction by breaking a previous high, or changed character, which is called a change in character, created a fair value gap which shows depressment, and violated another inversion fair value gap. And immediately I saw this fair value gap and this change in character, I entered my trade, which was a buy. You can see I used I usually use a 20 pips stop loss, guys, but in this case, and as you can see, my target was this point of liquidity. Let's go back the 5 minutes time frame. My target was this opposing liquidity zone. So in the 5 minutes time frame, you remember we identified these relatively equal highs as our opposing or our sell side liquidity. These relatively equal highs created yesterday. This zone is our sell side liquidity. And as you can see, immediately after entering our trade, the price came back to our zone or the fair value gap. This is our fair value gap, and moved or rushed the sell side liquidity. And this was a very good trade. 1:4 risk reward trade. So this is it. And as customary, guys, I'll be posting these trades or these trade recaps every day, so stay tuned. You should also subscribe to my channel and stay tuned. And hit the notification bell so that you'll be notified immediately I post these trade recaps. So this was it, guys. So this was my trade. The TP was hit at 11:44, exactly 11:42 New York time. It didn't take long, guys, for the TP to be hit. And if you follow the ICT, you know that you can trade until 11 o'clock or until lunchtime in New York. And because we are still in the down trade in the 4-hour chart or in the 4-hour time frame, you still could have taken this trade on the sell side. Guys, let me show you. You see, immediately after the price hit our sell side liquidity, which were our relatively equal highs, the price immediately reversed, creating a very powerful fair value gap and violating another inverted fair value gap. So this was let me shift to the 1 minute time frame. So, and as you can see in the 1 minute time frame, the price has broken below this high, which shows a change in character, and left a very big fair value gap. So this is our fair value gap. This is our fair value gap, guys. This is our inversion fair value gap. We have our inversion fair value gap here, created here on the green candle, and you enter on the fair value. You enter on the fair value gap. So you also could have entered this trade, but I didn't enter because, as I tell you, I only trade before 11 o'clock New York time. But this was a perfect trade that could have given you a potential 1:3 risk reward. So you enter in the fair value gap a stop loss of just above this fair value gap, and you target the next fair value gap. So this was the next. You can see this is a fair value gap here. There is a fair value gap, and you can see, guys, the trade went as expected and give us a 1:2.5. Actually, this is a 1:2.5 risk reward. So that is it. The price is still moving down once, or it's in a down trade. And if you remember, guys, we started by showing you that the overall trend is the overall price of the in the 4 minutes chart or the 4 minutes time frame. We are in an overall down trade. So that is it. That is how you trade the ICT. In the coming week, I'll be making a full video of how to trade the ICT trading model or the ICT trading strategy, how to mark your liquidity zones, how to identify fair value gaps, how to identify the daily buyers, and I'll also make a video to show you how to use the CTrader, this powerful trading platform. As you know, I'm not a very big fan of MetaTrader, so I like using or I like doing my analysis on the CTrader trading chatting platform. It's a very powerful trading or chatting platform with all the features that you need, guys. And it's very easy to install or work with, guys. So thank you. See you next time. God bless you, guys.